diversified. We own a lot of boring names, names that haven't been in the news a lot, that have done quite well. 3M being one of them, Albemarle being another, Caterpillar. There's some financial insurance companies that we own, and some other companies that are industrial companies that we like. And so, we really just believe diversification is key here, and position sizing. So that is one area where, as bullish as we are not liking Nvidia at 8%. We're liking Nvidia at 2.5, 3%.
All right. When we think about who may run the Fed next, I know that Waller is thinking about inflation, that it may likely come down a bit. Rates maybe can moderate or come down too. Then there are others who think that we should wait. Is the rate picture important to your 8,500 target? I mean, are you expecting one or two cuts that we've discussed, but is it imperative that we get those?
Yeah, I believe it is, Nicole, and the people that I'm talking to, kind of inside this, industry, wealth management, other CIOs, strategists, most people would agree that, these bullish expectations, and you can call them a potential pathway forward. Really, it is contingent upon a few things. We don't have geopolitical conflict that gets worse or expands. We don't have tariffs come back into the picture, and go through what we went through in April. Certainly, those could be a wrench. But one of those is the Federal Reserve. If the Federal Reserve, turns around and starts getting more hawkish than that I think it may not change the outlook for companies like Nvidia or Oracle, but certainly the broadening that we have seen in the market, which we think is part
Well,
of
the
the reason
market
why
can
we could
stay
get to
on this little train
8,500.
right here,
That
bro.
broadening is likely no longer there, and small caps likely won't participate as much.
All right. Well, Jim Wharton, CIO Wealth Consulting Group, it's so great to see you. Really appreciate it.
Little
And
12
nice to hear
ounce
your
right here.
optimistic outlook. We'll have to wait and see. I know you had 7,000 as a target here, and you're right around that level, not too
Yeah,
far off.
right
So
here.
good guess in there.
Right
Good to
here.
see you.
Thanks,
Thank
Nicole.
you. Okay,
Thank
coming
you.
up
This
next,
trend. I'm trying to
options
see if they
corner.
follow
Tom
that
Hardy's
trend
standing by, and
upward.
he'll join us and highlight unusual options activity from the day and how investors are looking to trade on recent news of Lam Research, American Airlines, and Apple. Stay with us.
Right here. Right there. Right there.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of
Bro,
all,
they gonna break
you can
out right
ask
here and go
questions by
upward,
chatting
bro.
directly with
It's
an
whenever they
education
gonna
coach.
do it.
It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis, from U.S. equities to global macro Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com. Welcome back to the watch list. This time for Option Corner, where we analyze unusual options trades that we're seeing throughout the day. Tom White is with us, host of Fast Market here on Schwab Network, and we're taking a look at a few names. And you have a mixed bag here. We'll start with Lam Research, LRCX, and you're looking at this one. You have a bearish trade that you're sharing with us. What gives? What are we looking at here?
Yeah, Lam Research has had a great year so far in 2025. It's up over 140% this year, even though we're seeing that slight pullback, just about 2% from those all-time highs that we recently reached here. This wafer fab equipment maker, they service the semiconductor industry. We've seen the demand in some of these sectors that are offshoots of the AI play here, and that's whether it's memory chip makers, equipment makers like ASML, Lam Research, Haley, also within there. They've had pretty good years here based on the AI infrastructure build out. Last quarter they had a beat and raise quarter. They see solid wafer fab equipment growth for all end markets into 2026. They raised their current quarter Q4 guidance during the quarter also. And if you look at their EPS growth, historically we see just over an 8% growth rate. That's supposed to be nearly 16% so far this year. So the supportive nature that we've seen from earnings and their results have kind of funneled into this 142% gains that we've seen so far this year. And the analyst community raising price targets across the board recently after their earnings. Mizuho recently put $200 price target on it, up from 170, and says that the 2026 wafer fab estimates have been improving in the stock. But that being said, we did see some unusual option activity on the bearish side here. Maybe somebody looking to take a speculative shot to the downside here, that maybe the stock's gone up too far too fast. This was out in the March monthly option, so plenty of duration on this trade, over 80 days. Trader bought 10,000 of the March 170 strike puts, paid a pretty hefty option premium. They paid $12.60 per contract on these, so that break even where this trader starts to profits below $157.40 over the next nearly 3 months. That's about 10% below the current share price. I don't think this is somebody out there maybe hedging an existing long stock position, because they're paying a pretty hefty option premium, as I mentioned, for these puts to the downside. But yeah, giving themselves nearly 3 months in this position, Nicole, with the expectations that we're going to see maybe a little bit of a reversal in the shares.
Understood. All right. Next up, let's talk about American Airlines. I mean, we have seen, the holidays booming. You had some of the guests coming in here and Ted Weisberg picked these airlines that soared and took off, no pun intended. And you're seeing people, sort of going through all the TSA checks that we checked. It's unbelievable. What about AAL here in the bullish trade?
Yeah, stock's down nearly 2% today, but up about 7% so far in the month of December. We've seen a resurgence and maybe a reset into some of these more discretionary travel names recently, whether it's been the cruise lines, the airlines, some of the hotels also. Still down about 13% so far this year, but we're seeing demand continue to be robust, and we've seen that across the board in the travel and leisure industry at this point. And then you see crude oil prices down at $58 a barrel. That's been a low area that we've seen over the last 12 months. Oil prices are down 19% so far this year. That equates into lower fuel prices. That goes straight to margins. Now, the big players within this space, the Deltas, United, and American, they'll probably do better than maybe the lower cost or regional airlines, just due to the fact that they get that premium buyer, they get that international traveler, they get the business traveler, and those are the higher margin segments of their business, and the economy continues to grow. We saw that from the last GDP reading, over 1% above what the estimates are. So people are still out there traveling. Jobs market, although it's weakening, not really hitting the travel industry at this point. But we did see some bullish activity in here. And this was all the way out in the January of 2027 options. So about 382 days to expiration. So this trader gave himself plenty of time They bought 4,000 of the January 2027, the 17 strike calls. Paid an average debit of $2.30 on those. So the break even of $19.30 over a year. That's about 28% above the current share price, but on a dollar for dollar basis, not that much higher. I think the key with this trade, instead of buying the shares, this trader just bought basically an at-the-money call with the expectations that, hey, over the next year, we're going to see some more gains in the in American Airlines stock.
Right, understood. I mean, I saw the Jets ETF too was at some new recent highs. I mean, there's no doubt that people are spending and all that. Is the revenge trip still on? I don't know. And we saw resiliency with the spending from Visa and MasterCard pertaining to people spending over the holidays for gifts and things. Let's talk about Apple, a bullish trade you found.
Yeah, the stock pulled back from those all-time highs that we saw earlier this month, about 5% off of those levels, but still up about 9% on the year. We've seen that super cycle that's kind of taking place with the iPhone 17, improving sales not only domestically, Nicole, but I think one of the keys is the resurgence that they've seen in sales over in China. They basically took about 25% of the market share over there. They're on track to be the most bought smartphone out there, overtaking Google Alphabet and its Android system at this point. So that's been a positive, but we've seen repeated good commentary on the stock. Wells Fargo reiterated their overweight rating $300 price target today on the shares, citing significant market share gains for non-Chinese branded phones in China. As I mentioned, they're seeing some really good data from there. Total mobile phone shipments in China grew by 2% year over year to approximately 30.2 million units in November. So they're getting good data. The stock's been rewarded, but it's at high valuation levels on a historic basis. We'll see if that trend can continue. We'll probably get some data from Apple over the next couple of weeks as far as sales goes.
No, you ain't. Apple ain't gonna tell you
shopping
nothing. No, you
season
ain't.
also, so that might be a catalyst over the next week or two. And we did see some short-term call buying in.
Apple ain't
This was in
stuck,
the
y'all.
January 9th weekly cycle, so 11 days to expiration. Trader bought 7,000 of the
Let me
280
see, Apple
strike
over
calls out of the money to the upside.
Trying to be positive on the day, while everybody else is being red.
In this position, so not a lot of option premium. So the break-even for this trader where they start to profit is above 281 over the next week and a half. That's only about 2.5% above the current share price in Apple. So yeah,
Hey, look at this crazy bounce and then
in Apple and American Airlines today.
Alright then, P.O.
Okay, well, Tom White, love having you here for Options Corner every single day on the watch list at this time so people can see real options trades that you found. And some of them very unusual options activity on news and such. Tom White, thank you.
Thanks.
All right, coming up, well, we're looking at the cannabis industry and how things are reacting to big marijuana moves. We'll be right back.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's
Start getting on my
interactive
nerves.
learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Christmas Eve, day after Christmas, just being bearish.
I'm Kevin Green,
Like,
and I track
bro.
options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts,
right?
articles, courses, and more. All crafted just for traders.
They try to pull the market back, didn't they, boy?
Curated to fit your unique goals.
They do it to the, what they do it to our money, boy.
And more time learning.
They don't
Trade
tripping on me, boy.
Welcome back to the Watch List. I'm Nicole Pavlovides. We're live on the floor of the New York Stock Exchange. Jen Ahrens is with me, portfolio manager, advisor shares, Pure U.S.
There we go,
ETF, MSOS. We're taking a look at this ETF. Of course,
get a rejection right here, boy. I'm gonna slap somebody, boy.
Reclassification. And that was ultimately good news, right? It was a 1, which is more like heroin. It was moving to a 3. Where do we stand on that right now? What's the timeline?
Well, this executive order that Donald Trump just signed last week is the biggest news to happen to U.S. cannabis in 50 years or so. It's a monumental shift from, as you said, Schedule 1 on the DEA list down to a Schedule 3. And it's huge news for the U.S. cannabis industry. But it's not completely done yet. And when he signed this executive order and the news hit, a lot of people didn't know what to do with it, and we saw extreme volatility. So we're looking forward to the future in these stocks, and we think it's going to be a very, very good thing. But for now, these stocks are still traded OTC in the United States. That's how they're held inside of our fund, mostly with total return swaps, OTC stocks, very volatile. And we don't know the exact date of when the DOJ and Attorney General Pam Bondi is going to sign it. It could be this week, it could be next week, it could be next month, and there's some uncertainty there.
Marijuana Herald said that President Trump directs Attorney General Pam Bondi to finalize the marijuana rescheduling by the end of January. So this executive order helps to move things forward, but it's not a federal legalization until, I guess, Pam Bondi finalizes this marijuana rescheduling. In the meantime, it's something that's been talked about for so long. For example, when we look at MSOS, I mean, we saw it moving higher. August, September, October, November got the highest point just last week. But big picture, this group, people have been waiting years. Is now the time? Is now the time to get in this group for the years ahead?
We like to think so. These U.S. cannabis stocks are very different than Canadian cannabis stocks, and they've been in the penalty box for the last 4 to 5 years with a lot of politicians' rather empty promises. But again, we're very excited now. At the same time, we realize the stocks that are held within our fund are still OTC traded. We're looking forward to this rescheduling. Then we're looking forward to additional steps of banking, listing on major exchanges, not having this outrageously unfair tax penalty that these U.S. companies suffer of called 280E. So, no, we're very excited about the future. This is a very big move. Promises made, promises kept by Donald Trump. With the caveat, we're still waiting on Pam Bondi to sign the order. He did say that he wanted it done expeditiously, and we're very confident it's going to happen, but the outside world is unsure based on all these false promises that we've had from politicians over the last 4 or 5 years and the suffering that these companies and investors in these companies have been through.
Yeah, what kind of names do you believe in most in the group? You talk about U.S. cannabis versus Canadian cannabis. What names do you hold in the fund or that you like the best in the group? Which ones are the ones you can really count on, good or bad? Whether they're U.S. or Canada. Which ones are the names that you like the best?
Sure. All you have to do is look at the holdings of our fund, and
Come
our
on,
fund,
PL.
ticker symbol MSOS, is the
Time
largest
to slap
cannabis
somebody.
fund in the world. The holdings are on the website every day. Curaleaf is our largest holding. Actually, the largest cannabis fund in the stock, in the world. But again, traded OTC in the U.S., so it doesn't have quite as many eyeballs on it as some others do. Just behind it is the company Trulieve. They're the biggest cannabis company in Florida, the very substantial medical market there, and a few other states. And then we also have our global strategy cannabis fund, ticker symbol YOLO. It holds U.S. exposure and Canadian exposure, even European and an Israeli. Our top holding there is Village Farms International. Because they keep their THC cannabis business on the Canadian side of the border so far,
Come on, PL.
but they
Shit.
have a lot of U.S.
Come on,
interests.
PL.
They are able to list on major exchanges, list on NASDAQ, and
I keep
they're
telling y'all about
holding in our
PL, boy.
global strategy.
While the market
YOLO.
fall, ain't gonna do what it do. PL gonna do what it do.
Fund flows or any
Let's go,
sort of
PL.
rebalancing or repricing that might occur here in the first quarter?
Well, again, we are very bullish on this happening. We are told that the Pam Bondi signing off in this order could happen any day or any week or any month. It's going to happen soon. We very, very strongly believe, and we think that's a big leg up. But the caveat, this is still a very, very volatile area to invest in, and we see multiple legs of this move up.
What we're talking
Signing
about.
the order, again, it's the biggest move in cannabis legalization in the last 50 years in the United States. But another leg is when these companies can actually bank, some sort of safe banking act. Then we need them to list on major exchanges in the U.S. It's very unfair that these U.S. companies with U.S. employees and U.S. operations can't list on major exchanges yet. We see that as another big boom to these companies, getting more institutional investment and everything that comes along with it. So we're excited about the first quarter of this year. What's going to happen. But
don't
again,
reject here again. Y'all need to break out.
I see multiple legs up.
If anything, be careful.
Steps.
Might be a point to take profit right there.
Legalization.
There can be some exciting things to come if this actually goes through in January. The question, too, as we talk about recreational marijuana versus medical marijuana and, federal approval. This may go state to state, theoretically. Is that right? If this goes state to state to decide, you will not get federal legalization across the country. You will not get safe banking opportunities, and you will not be able to list on the Florida Stock Exchange, for example. That doesn't seem like the path people want, but how likely is that?
Well, I think that's partially correct, Nicole. Again, this rescheduling is happening. We need the DOJ to sign off on it still, but Trump has directed them to do so. And that's a medical rescheduling. Then we're told that we're going to get guidance from the DOJ that gives safe harbor to states' rights. Because we have well over 20 states that have legalized in their state adult use cannabis. And what we're looking at here is having that not be contrary to federal law. Again, deferring to states' rights in those states that choose to have adult use, but safe harbor from the federal government that is not contrary. So this rescheduling
my target right here on PL.
Lead to
2020
and listing on major exchanges.
What a year,
it's
boy.
Very unfair that those things do not exist for these U.S. companies, but a company in Canada, for instance, can list on major exchanges, bank. They just can't do THC business in the United States yet. So the rescheduling is a huge step.
Hey, this is
gonna be
insane, boy, right here.
To follow,
Crazy bullish,
and
crazy
some real
bullish,
serious
crazy
guidance and
bullish.
safe harbors that have to come from the DOJ.
Yeah, and we'll keep following some of these exciting names. I mean, Curaleaf, Trulieve, YOLO, your MSOS, of course, which is huge. Dan Aarons, people love to talk about this topic because there's a lot of high hopes for this going forward. Thank you. Good to see you. Supervisor shares Pure U.S. Cannabis ETF. Thank you. Still ahead, from AI-powered satellite imagery to direct-to-device connectivity and a renewed push toward the moon, how Planet Labs global star with Apple and Intuitive Machines are shaping 3 space-driven investment themes for 2026.
Let's go, PL. I see you, baby. I see you, PL. Let's go. Let's go. Let's go. Let's go. Shit. Dips. So good though. It was alright. Not too bad. And there's a scanner trying to say PL now at $20. Told you we want $20 for that PL.
Sometimes, you know,
I told you we was doing that.
you could have done better.
Come on, market.
Same
Get
goes
over
for
the hump,
everyone
market.
else.
Market
You're looking to
oversold.
invest smarter with Schwab.
Real-time
Market gonna break out though.
earnings breakdowns and trade-ready insights. Follow me on X at Sam_Vilas and connect with me on LinkedIn or Instagram for more.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to the watch list. I'm Nicole Petalides. Greg Pendy's with us, Equity Research Director at Clear Street. Right now, the Dow is down about 193 points, so we're off the lows on the day. Why don't you take a look here at AI-driven Earth observation? Some of the data that's been coming in. Why is this something different or advantageous for the new year?
Yeah, absolutely. So AI
PL.
From Earth imagery,
Stand
it's
us
been
at
done for
PL.
years. But what the key changes that we're seeing that take place right now is when we talk about AI Earth imaging, we can be talking in the terabytes of data daily. So we're just talking hundreds of thousands of images. And the key game changer right now that's
Scan us at
unlocking
PL.
value in these huge databases is AI and machine learning tools.
You know what I'm
that can
saying?
now
We was
give
early on
rapid
PL.
insights to customers,
Kept telling y'all that.
in areas from
You know what I'm saying? If you
defense
subscribe
industry,
early
also in
to the
areas
Frost
like
21,
agriculture,
Sheldron Frost,
insurance,
you know what I'm saying?
and
He's
also,
looking out for everybody. He and PL.
Wow, that's a lot across
Let's
the
go.
board.
Let's
start
go, market.
with at least one of them when we talk about insurance, for example, or climate change. I mean, I guess you're looking at how things are reacting, whether it's water or wind or things like that make a difference.
Absolutely. So there's companies that are actually mapping, like Planet Labs, which are mapping the entire Earth daily. And they've been doing this for over 8 years. So you can essentially now use AI and machine learning tools to look for changes and patterns over time, or more immediately when you cross over to the insurance industry. If there's a natural disaster, companies like AXA are able to kind of instantly be able to assess the damage with Earth imaging data.
Right, understood. I mean, when we think about what we're getting that is real time, you talked about defense. Tell me about that. What would be maybe a base case that could be happening in 2026? Why is this important? Give us a scenario. Maybe something that's even likely to happen or happened already.
Yeah, absolutely. So within the defense sector, you have areas, let's just take a good example like this, the Chinese spy balloon. They just kind of, we noticed it when it appeared over Alaska, but no one had really been looking for it until it was finally discovered. But when you have Earth databases like a company like Planet Labs, not only were they able to identify the spy balloon at that point in time, but then they were able to go back in the database over 6 months and track where it was at each point during a day to find out where it had actually launched from in China.
Right, understood. When we think about the investment or stocks that could move along with this, now we're talking about it in the big picture. What can investors do to make money on the monetization of the AI in the global lunar world?
Yeah, so the name we like right now within the AI and Earth observation side of things is Planet Labs. We raised our price target today to 22, and we believe that the business
22 on Planet Labs. Okay, Schwab.
Accelerating due to the use of AI, but we believe that the financial outlook is very compelling for a lot of investors. As we look out over the next 2 years, we believe that they're well positioned to reach that golden rule of 40, which is usually what a lot of investors look for in the high growth, well-respected software and data as a service companies. And we see Planet Labs positioned 2 years out for 26% top line growth and a 14% EBIT margin. And you add those up, and that gets you to the rule of 40.
Other things here: low Earth orbit, global star, intuitive machines. I don't know which ones are actually acronyms or which ones are publicly traded. Are all three of those publicly traded, and do you like all three of those?
Yes. So we'll take it step by step. So we talked about the Earth observation side of it, where we like Planet Labs. When we move over to Global Star, that's on a communication satellite. So again, like Planet Labs is taking pictures of us here on Earth, Global Star is actually working on communications.
Tell them about PL again,
Their constellation has a unique relationship with Apple as a wholesale partner. So if you have an iPhone 14 or higher, what Global Star is actually able to do is get rid of a lot of those dead zones that we all know of, where we're not within reach of a cell tower, and you'll still have text and SOS capability if you have an Apple 14 or higher. So essentially, the towers are we've built out cell towers over the past 20 years, and we still have areas where it's uneconomical to put those towers or just improbable to put those towers. So think of satellites as able to fill that void when you're out of range. And you're going to see a lot more direct-to-device plays, we think, in 2026 to get rid of those dead zones.
Any sort of agenda, catalyst, vote, finding, something that is going to put a date on my calendar when it comes to these names in the first quarter or the second or in the first half of the year? Is there anything that might be a catalyst for any one of these names? Is something working on something special, or is there any sort of vote or anything like that?
Yeah, so with Global Star, what we're talking about, we'll be watching for those iPhone 17 sales. You had a guest on earlier on your options segment who was talking about them. But the more iPhone penetration of 14 and higher, that's good for Global Star because that enables more devices that can access their handset. When we move on to a catalyst-rich name, I would go over to Intuitive Machines, ticker LUNR. This morning we took our price target on that name from 17 to 25, and we believe that's going to be very catalyst-rich. Intuitive Machines is a play on the lunar economy. It's a play on the plans to not only return humans to the moon in 2028, but to actually build a permanent presence on the moon in 2030. And some of the key catalysts we'll be watching for with Intuitive Machines will be, one, a lunar terrain vehicle contract, which they are one of 3 bidders on. We expect that to be announced hopefully in the first half of 2026. We also believe that they'll be preparing for their first IM-3 mission launch, which will carry an actual satellite of theirs that can begin the start of a communication system orbiting the moon. So similar to Global Star, which is focused on communications around low Earth orbit, we believe that 2026 we're going to see the U.S. and Intuitive Machines play a key role on building a communication system around the moon.
See you, Greg Pendy. Interesting, topic. We don't talk about this all the time. Really appreciate it, Greg Pendy.
Boy, PL, it's the future, boy.
Thanks for
Still
having me.
ahead, panels all around. Housing.
2050 on PL right now today.
The pending home sales, we saw that spike, but we're getting more data throughout this week. We'll be right back.
earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close. Here on the floor, I bring you real-time sentiment from traders driving the action. And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings. Live coverage of the close every single day. This is Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Sam Barnes, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
All right, we're talking about housing.
No, you don't. No, you don't.
Oh,
look at the market. Oh.
American Financial Corporation and Orfe Vigundi is with us, and talking senior economist at Zillow. Thank you both for being with us. So we're looking at what's been going on.
Hey, boy, y'all know that's my song, boy. What y'all talking about?
No one expects
Yeah, they don't. Yeah, they don't. We gonna make it anyway, Chad.
They do think it's trending low. Dada, what do you think here?
Yeah, I mean, affordability is at its best level in over 40 years, and that's a function of cyclical inflation. We're seeing that outpacing house price growth, and we think that dynamic will persist in 2026 and allow some buyers to come off the sidelines.
All right, Orfe, what do you think here? Because affordability is a constant worry. Our prices coming down a little bit.
Yeah.
She mentioned wages, also the stock market, was up 17% year over year. House prices have been flat, and the declining mortgage rate means that typical payments are on a basis. So in 2026, we're really modest increase in home sales as affordability.
Understood. I mean, Orfe, what do you think here when you think about where we are headed? I mean, do you see 6% for mortgages, and will that make a big difference?
Yeah, we actually see mortgages.
Come on, PL, get your fuck up there, PL. PL, get up there. Bullish divergence, PL. I told y'all to PL.
And then you have a cooling labor market, right? And so we expect mortgage rates to ease a little bit and settle around 6%. Maybe we will volatility in 2026 to support more housing activity.
I'm chasing my dream while you niggas envy me. I swear this my destiny and I won't let it go.
I think so. I think there are several elements heading into the year. Demographics are just trying to make a way. They speaking on my name, but that shit don't get me paid. That shit don't get me paid. I watch out for these niggas cause I see snakes every day. Clutching on my horse, gotta watch out for these niggas. They plotting on me. Improvements in affordability is another tailwind as we head into the next year. Inventory is up on a year-over-year basis.
can't buy what's up for sale.
No
So
time
you
for the
have
drama, I'm just trying to make a way. They speaking on my name, but that shit don't get me paid.
affordability, incremental improvements in inventory, and this sort of sideline demand from the markets waiting to jump in when the payment to paycheck calculation makes sense for them.
Understood. I mean, when you think about the tailwinds, Orfeh, from what happens in 2026, do you think that we'll have a better housing picture? I mean, do we think that supply has become a little more available? What might drive things?
Yeah, I think when you look at where sales were in 2025, markets that have seen kind of an increase in the number of sellers and supply are markets where you saw an increase in home sales, and so we know the market's been trained. The combination of affordability movements, the return of sellers is likely to push home sales a little bit higher. Zero we forecast home sales to increase. Roughly 4.3 million home sales, existing home sales in 2026. That's a small improvement from where we were the past 2 years.
When we think about other costs, like insurance or getting a mortgage, those types of things haven't really come down much. Shelter just generally is expensive, and rent is expensive. Are those coming down a little bit? Because the costs overall, affordability still seems to be a thorn in the side.
Affordability will still be an issue next year, and I think you mentioned non-mortgage costs. That's one of the key headwinds that we're tracking heading into next year, especially in markets like Florida, Texas, where we see more issues with natural weather events, and we think rising insurance premiums are a key headwinds to the affordability equation next year. Rents, builders haven't been building as many multifamily properties, so as supply has come down, and we still have Gen Z aging into their prime rental years. We might actually see a little bit of a pickup in rents. Rents have been coming down, but there may be pockets of the country where we start to see rents accelerate.
Good to see you both. I really appreciate it. I mean, we'll continue to get more housing data throughout this week. We'll also get the Federal Labor Market minutes. We want to know inflation versus wage. People have money to buy houses, own jobs, and things like that. Aveda Kushi and Orfeh Devon, thank you for being with us. I'm Nicole Medley, Market and Close.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced...
Bro, this is like the biggest bounce ever.
Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investments in one convenient location. You can fund with underwritten decisions. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Bro, this is like the biggest bounce in history, bro. The biggest bounce in history has occurred. The Christmas rally is back. Oh, hold on. We gotta pass this level right here. Market bullish as heck all of a sudden.
RGTH.
Good afternoon. We're an hour away from the closing bell here on this final trading week of 2025. This is Mark on Closing Bell. I'm now talking to you from our trading room live in North Chicago headquarters.
Hello, Alex. Well, I'm Sam Barnes, coming to you live from the floor of the New York Stock Exchange. Let's take a look at what's coming up on today's show.
Damn it. With it all the days, be consistent as hell. And my mom be going to bingo. I told her, I said, bro, you need to put some of that.
RGT Life. RGT Life. RGT Life. LPTH. RGT Life.
I already know what you're saying. You sticking to your strategy. But I'm telling you what I'm seeing right here, boy. If they get one more green candle, this is so bullish. This is the next minute. This candle need to end in green for it to be true bullish divergence. Well, let me see. That's the guesswork. We gotta actually see if they actually do this formation. These motherfuckers. I put a day on both my side calls. I was gonna at least have some profit. Hopefully they don't pull back so much too much like after hours.
RGTX.
ILAG.
RGTI.
Where is this bounce at, bro? This is like a clear bull flag. So, right here to somewhere, bro. Should we see the bounce? Dollar Tree get broken. Bro, I was thinking about buying a freaking leap on them yesterday, like last night, and now look at these people. Look at these people chat. I was thinking about doing this on Quantum. So I know Quantum is going D-Wave and everybody's going right now. Well, not so much Quantum School.
QBTX.
Well,
And UAR. TKNO.
QBTX. QBTX. QBTNet.
Oh my god.
SLGB. ILAG. SOPA.
Alright, let me call you back.
ILAG. SOPA.
QBTNet. LPTH.
SOPA.
Wait. You said unlimited for how much? $15 a month. T-Mobile's new customer offer gives you half off any of their unlimited plans for 3 to 6 or the 12-month period. Now that's my type of deal. I kid you not. Mint Mobile's been stepping their game up. Get out of that current plan and I just know you're overpaying for it. Not gonna lie, I would be saving way more if I made the switch. Take me a look. I got you.
LPTH.
SOPA.
Alright, I'm looking for him to push up. But we need the MACD to cross. Right here. But they definitely have, the volume definitely picked up out of nowhere. Like, whoever's been holding, like me down here, boy, you got frosty hands, boy.
SOPA.
And I still want some more of this. Yeah, I want some more of this, yeah. Yeah, want some more, yeah.
QBTNet.
SOPA.
QBTNet. QBTNet. NABN. QBTNet. RGTX, RGTI, LPTH, HYMC.
You trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast right now. Are you a long-term investor? Our investor webcast series breaks down different investment styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with the participants. It's interactive learning that is fun. And live or on demand. Whatever the schwab.com/program, start learning.
HYMC, RGTX, RGTI.
Let's go. Good stuff, market. Good stuff. Good stuff. That's what I like to see.
Drawn it down. And so what they're going to have to buy now is really going to be subject to those higher tariffs. And I would not be surprised if we start to see some effect on prices as a consequence of that.
Dr. Warman, you mentioned or you danced around, I think, kind of the idea that the up and down nature, the unpredictable nature of the tariffs is what kind of drove the financial market volatility earlier in the year. One area that always seemingly is unpredictable up and down and back and forth is geopolitics. It's in the news right now as negotiations are ongoing on several fronts. What's your assessment of the geopolitical landscape and those risks that seemingly always remain and persist across the world?
I think it's impossible to say, right? We're in a very volatile times. I think that's a bit of an understatement. So a lot is going to depend on the resolution of these numerous conflicts, flashpoints around the world. I mean, there's a new one now with Venezuela and North America. So all of these things create uncertainty, and all of that uncertainty means, I think, as far as investment advice goes, I think caution is always one thing.
Bro, that's actually as accurate as I can get on this. That is the target. No, that's the area. This pattern is bullish though. This pattern is bullish. All this is bullish. We got retest right here. This is bullish.
Kind of precarious because a lot of the growth that we saw in GDP for this year came from investment into data centers and
fucking trade though. You know what I'm saying? I'm a trade. You know what I'm talking about? I'm gonna give me some shares. I'm gonna trade this market. Give me up here. Give me up here. Up, up. 1 minute trend breaking. That's alright though. It's alright. People just taking profits on the 1 minute. You know, everybody can't have frosty hands. I'm over here dancing, y'all. I'm looking for the market to catch a rebound and break out somewhere, boy. My target, I want to say my target is like 690, but it's really like right here. If they can get up here today, that's gonna be crazy. I'm just gonna see. Like, if they can get up there and make it to 690 today, it's gonna be wild. Wild. Like, wild. This is an insane move. And $2 more ain't nothing for them. Up here. I wanna see them get up here somewhere. You know what I'm saying? Pull them green, them God candles out like how y'all do when y'all liquidating everything. Y'all give us the big red ones. Give them big green ones out. You know, give us them Christmas rally candles out and them Happy New Year candles. You know, where they at? You know what I'm talking about? Give us a God candle. Yeah, right here, yeah. Come here, right here.
Somewhat into a stagflation-like type scenario, and then what are you hearing about amongst your peers about the potential prescription if it's not rate cuts?
It's really tough, isn't it? Because
careful right here, though. Be careful.
meeting was really a split decision.
It's not bullish all the way
More
yet.
polarized than their decisions have been in a very long time. So even among the board of governors, there was a lot of the open market committee. There was a lot of disagreement about what to do. Some that thought the rate cuts didn't go far enough, and there were some that thought no, inflation is too high and we shouldn't be cutting rates right now. I hope that we get some clarity once we have the
Nike pointing down, they bearish right now. Gotta pull this back. I'm still looking for a bounce somewhere, but they try and pull it back in the short term.
Getting those FOMC minutes tomorrow for a little bit of more of a snapshot, at least for more clarity. Will be the big event for this weekend. What does that look like for data like one? Thank you so much, Dr. Allman, for joining us.
to the actual raw data releases. And this economy remains quite resilient, and we've thrown a lot at it and have held up quite well. And so we continue to be somewhat optimistic as we go into 2026. We see that there's a lot of investor concerns out there, so the market's been climbing on a wall of worry, and that's pretty typical. But the Fed is easing. If you go back historically, every bear market that's happened since the 1970s has been preceded by the Fed tightening. So that's less of a concern. You have fiscal stimulus coming from the big, beautiful bill, which is going to lower the cost of capital for corporations and provide a little bit more just money for consumers, although it's a little bit top-end loaded. We anticipate more deregulation, and that's going to spur continued M&A, and we've already had a big spurt in M&A and a lot of announcements that will be completed in 2026. So the capital markets seem pretty healthy. I was hoping that we might get some signs by today that we were on path to get some sort of ceasefire or end to the Ukrainian war, but that doesn't look like that's happening. But that would be a big positive, especially for Europe as we look forward.
Yeah, so it looks like as far as the commentary coming out of that.
Hold on for a second, y'all.
Choose to continue to iron out, but let's see. At least that
I gotta
gives us
see
some
if they
optimism, as you say, moving into 2026, if they're able to get
give me
that
1
across the line.
second.
But it's why we
See if
enjoy
they
our
pulled
job,
up
is to
my
hear all these diverging views, because
my
our previous
little
guests sound a
groceries.
little bit more cautious than you're sounding, but
I'll
still,
smack
your
Amazon if they give my
2026
groceries
outlook
to
is
somebody
one of
else.
guarded optimism. So why guarded?
Although now they want to move my order to,
there's a number of
it'll
reasons.
be here at 5:30 now.
Your
Like I don't got stuff to do after
guest
this.
had talked about the sort of the low-end consumer. We have sort of this K-shaped economy. The latest readings that we've been seeing suggest that things aren't improving; they might be worsening. And that's true for small businesses as well. And by small business, I mean businesses that employ less than 50 people.
Need this to break right here. This area.
Is, one of the
this area.
as a group is one of the largest employers out there. And the market's done a lot of work. Over the last 3 years, the S&P 500 is up 80% on a cumulative basis. That's on a price basis. Earnings up less than half of that. So, do I think the market's going to
Man, come on, PL, bro. You gotta stay above $20,
returns
bro.
from here? No. And it could be
They gonna
somewhat
put PL
volatile.
back.
I'm not a big believer in the 4-year election cycle, but historically, it's true that midterm elections
Pull it back
tends
just so they
to
can
be a
bounce
lot
at the
more
very
volatile.
last 10, 20
Going
minutes.
back to the 1930s, 2/3 of the time, the market during a midterm election year has seen a 15% drawdown or more.
Whatever.
And so, that creates some caution. And there's the whole AI thing. I'm always concerned just because it's concentrated in such a few number of names with really high concentration in the
Well, they might bring this down a little bit lower.
and, which just creates a lot of stock-specific risk. And we've been, sort of looking at EM as a way to get cheaper exposure to some of that AI story.
It's all-time high.
If you look at the MSCI EM index, the largest weight in that
right
index
there.
is the technology sector.
That's where they reject them from.
And you get a lot of companies that are important in the AI supply chain. And yet it's selling for 16 times forward estimates, which is a huge discount to what the technology sector here in the U.S. is selling for. So that's another thing that we've been focusing on is just, I think diversification is going to be a bit more important as we move into the 2026. Active management has not been very helpful in 2025. We anticipate that there's going to be some dispersion just in terms of returns of the top names, which should give active managers a bit more of a leg up. Additionally, the quality style. So, companies with strong balance sheets, with decent returns on equities. That quality style has done really poorly in the last year. That doesn't happen too often, and typically it mean reverts pretty rapidly. So we're also suggesting somewhat of a quality emphasis, so that sort of evens out our optimism. Is that we're taking somewhat of a gradualist approach, and in our guarded optimism.
Craig, you mentioned some of those positioning things in terms of diversification, emphasis on active. You also tied into some of the reasons why you're guarded. What would be sort of the trigger to make one decision or another? I know it's not that simple, but in terms of what are you looking for as like an actionable reason to maybe switch to more of the guarded or more of the optimism, if that makes sense?
Sure. So a few things. One would be if for some reason the Fed changes course and they start raising rates, that would be a signal to potentially get a little bit more conservative. Another is we continue to watch for layoffs. We pay attention to every week the unemployment claims, and those have been very calm just in terms of the numbers, but if that started to spike up, that would create more concern for us. On the other hand, if we start to see better performance out of small caps and mid caps that's supported by earnings, that would be a really healthy sign, and that would get us a bit more excited. Of course, we're going to be paying attention to earnings, and that's going to help us also determine whether we need to make tactical adjustments. Right now, we're
I ain't gonna do nothing.
Strategic weights.
Y'all need to get PL up there.
Sort of in Warren Buffett parlance.
Hey,
Not
PL.
seeing any big fat pitches out there, so we don't really want to stick our necks out. We do think
They pull back. They pull back hard, bro.
Is the right place to be. And again, that's just because we're still in this secular bull market. And even if you got a pullback,
But then when they go up, it's all slow and stuff.
If you do have cash on the sidelines.
Kurt, we gotta leave it there. Really fascinating stuff, an exciting outlook. Guarded optimism may be a term we start using more in 2026. Appreciate you taking the time. Kurt Thomas of Touchstone Investments. Coming up next, it's Options Corner. Rick Ducat's going to join me here in our studio. We're looking at Amazon after Evercore ISI named it its top large cap internet pick for the year. We'll be right back.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques, like trend analysis, price patterns,
Market bearish.
averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Kevin Green, and I track options for daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network and schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to our Options Corner. I was talking alongside lead market technician for the Schwab Network, Rick Ducat, here in our Chicago studios. We're talking Amazon after Mark Mahaney over at Evercore ISI named the company its top large cap internet pick for 2026. Now, that's just one headline, Rick. There's always stuff going on in Amazon. I know it has a few other headlines that you wanted to discuss briefly. What else are you watching at Amazon?
Yeah, not too terribly much. Kind of a slower week here. We can see that Amazon is notably the laggard among the Mag 7 group here. Kind of a tough group to make direct comparisons to, but as you can see, Amazon the underperformer, 5.5%.
Oh, so they want to bounce right here. Okay.
Up 19.5% here. If you want to just look at big box retail more specifically, you can see Amazon kind of in the middle of the pack here among its U.S. counterparts here. Alibaba is the outperformer. Now, if we want to more specifically look at Amazon's here on a yearly candle basis, we can see that they have moved beyond this downward sloping trend line here. We've had a small breakout beyond that level, but we're stuck at our previous resistance here, our old relative highs near about 232 on red line here. A couple other notable highs, 239, and also back there at our red line, 242. To the downside, 211, repeated low point here, here, and then another low point at 198. So if we were to look at our moving averages that we follow here, well, we've got a cluster of our
okay, Amazon, okay.
quarterly moving averages all together right around 230 to 231. So that seems like an important downside area to watch as well for a potential break lower. RSI above the 50 midline, not really doing a whole lot of strong pushes to the upside or anything, kind of moving sideways somewhat here with price. Look for another push to the upside coupled with RSI to make new relative highs along with price. Finally, if we were to look at a volume profile study, we can see that our point of control right about here, our heaviest trading area of all, comes in around 222. We also have another node almost as big, near about 230. So those could be some important stair-step areas to hold on to. Meanwhile, things pick up again, notably up here, near 250.
Yeah, the upper half of the volume or the value area between that point of control to let's call it $15 range, 220 to 235, really seems like the story. But Jenny and I were talking about this today. Like so many of these stocks are kind of unchanged. Amazon being one of them over the last year. And yes, if you've been invested in performance, but man, it was such a different year than that led that to believe. Huge drawdown, huge recovery, kind of a wicked drawdown that we're in right now, nothing like the first half of the year. But when it comes to positioning and options activity and all the trading that's taking place, all that being said, what stands out to you?
Yeah, when we look today, it's light.
All right, y'all, be careful, y'all.
Versus the 5-day moving average options volume.
Last week, you think too. So
yeah, exactly. So a pretty light day. We can see the expected move for our next two monthly expirations here. Our orange box about 4.7% by January 16th. Our yellow box February 20th, 10.7% or so. Notice that February is about where we have those all-time highs as well. That's the upper edge here. But heavy skew toward calls today. About 70% of the 250,000 options traded today were calls. The open interest, that was the highest month, is January 16th. The highest volume is Friday's expiration. Not really very surprising. That's about typically what you would expect here. In terms of the most important open interest strikes here for January 16th on the call side, 240, 250, and 260. And on the put side, 190, 225, 230. One notable trade as well. A $2.2 million debit paid for plus 2850, 2,850 market March 20th. 220 strike quotes here. Not clear if opening or closing. If it was opening, though, it will be looking for a 23% decline to break even during the next 81 days for a potentially bearish play.
Lots of stuff to digest into the new year, but fascinating look at Amazon. It was fun how that stuff lines up with some of the technicals as well. Rick Ducat, lead market technician, really appreciate it. So we send it back to New York and Sam Bottom.
Thanks, Rick and Alex. Well, coming up, it's time for Overlooked Stocks. George Sillis will join us. He has his eye on a uranium stock today. That's Energy Fuels heading into the close. We'll break down the news about that company and what you need to know about the stock performance coming up next on Market on Close.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
I'm Jenny Ward. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com.
How's it going? First day, so sometimes you know. Next. Try again. You could have done better. Please. Same goes for where you invest. Level up and invest smarter with Schwab.
What's up, Carl Nation? It's your number one broker with the best full-service wealth management skills in the biz.
Actually, I've seen something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab, a modern approach to wealth management.
Stay connected to markets with Schwab Network.
Tune in 24 hours a day, 7 days a week at schwabnetwork.com
And on all your favorite streaming services. Schwab Network. Available anytime, anywhere, on any device for free. Welcome back to Market on Close. I'm Sam Barnett, live from the floor of the New York Stock Exchange. It's time now for
Oh my God.
We're watching Energy Fuels, which is harder after releasing some data that shows it
Get in the
exceeds
house
the
right here.
guidance for the full year. So I'm joined by George Sillis, senior markets correspondent, to break down the details of this one. So it crushed guidance, which is perhaps behind the rally we're seeing up 3% right now, George. But just talk us through what they've reported here.
Well, I think, this is an interesting play on this sort of energy renaissance that we've got going on in this country. Also, I would call it maybe a U.S. Department of Defense renaissance, too, in terms of national security, because, there's only a few players that are actually in the space of exploration, recovery, and sale of uranium and rare earth metals, and that's essentially what Energy Fuels supplies the marketplace. In fact, they've only got one and only mill that processes uranium in the United States, the White Mesa facility here in Utah. And so the other thing about business is they've been expanding internationally in countries like Brazil, Australia, Madagascar as well. But, the company's actually performed quite well this year. It has pulled back from the highs earlier this year. It has to do with some dilution effects, which I'll explain in a second. But the whole premise behind this business is the renaissance behind nuclear. And the challenge with some of those nuclear plays we talked about over the months is many of them really haven't manifested any productive revenues, or they're still in planning phases. When if you look at Energy Fuels, this is a business that is in operation, and they're generating sales. And they did come out and denote their guidance for fiscal year 25 actually was less than anticipated, because they increased their production rate for the full year, an increase greater than 1.6 million pounds of product in terms of ore and aggregates for uraniums, and this was 11% higher than the previous estimate. The other thing I noticed too, when you look at the Q4 sales that the company posted recently, those numbers were higher by 50% compared to Q3 on a year-over-year basis. And I think the reason being the stock has pulled back, Sam, since the highs earlier this year. Risk looking at that stock is up still more than 200% in the last 52 weeks. Is financing. The company is clearly financing its expansion because I did notice that in the last 4 quarters, the total diluted weighted average share count is close to 214 million shares. Just going back to 2023 for a benchmark example's sake, it was around 160 million. So their total share count has actually increased 48% over last year. And they did raise a significant amount of cash. Market cap right now 3.6 billion, but they do have 235 million in cash and no debt.
Okay, you mentioned this whole Renaissance. Obviously, as far as an investing theme, if one's sitting there sort of listening to us right now, where does this fit in the grand scheme of things into the entire, piece of the puzzle as far as, the supply chain story, critical minerals, rare earths, obviously trying to compete with the likes of China. I see you talked about Australia as well. They have, obviously relationships with that country too. So obviously, the US can't just do it alone as well. Where does it fit into the nuclear story as part of the sort of overall investment theme as to, where we're up to in that narrative and also with regards to the commercialization of all this stuff?
Well, yeah, I think the whole sector is being reshaped. And so you have to be careful and, of course, consider some of the value traps out there. You look at energy fuels, they're at the core. And what I mean by that is exploration and recovery of uranium ore, plus at the same time the next step is processing. In other words, getting rid of all the excess waste product from the aggregates, and then of course shipping that out to other facilities, which then utilize the more processed ore to enrich uranium. So they're not in the enrichment stage of nuclear fuels, but nonetheless they're in the starting point. I think what's important too is that they're not a business that's based on hope of some technology that needs to actually get approval from the Department of Energy and dealing with national security issues, which is transporting nuclear fuel and these microgrid power installations that Aqua and other companies which have generated revenue are going to face challenges going into. Energy Fuels is actually selling uranium. They have 2 major customers that they reestablished supply agreements with. These are nuclear power customers. And so, again, for what it's worth, prices of uranium have actually increased, volume production has increased, and that has actually catalyzed the stock from a tremendous low base of around $3 to the high. Looking at the chart, it is over $20. So this is essentially a huge renaissance in energy, but there are still some risks because, again, this is a high capital intensive, high cost, business. And so I do think that the company did what they should have done, which is they've issued shares to shore up their cash position to continue more steady state production and, of course, processing of the uranium.
Awesome stuff. Thanks so much for giving us a quick run name. George, as you say, running over 190% or so year to date. They're very much outperforming here. Thanks so much for helping us unpack that one today. I'll send things back over to Alex in Chicago now.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
And I'm Jenny Moore. This is Next Gen Investing, where we track trends shaping across markets.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a new level of the stock.
could certainly be a short to near-term catalyst. Next generation Testing, 1 p.m. Eastern.
Only on Schwab Network.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
We're back here in Los Angeles, Santa Monica, the New York Stock Exchange, alongside Alex Green in Chicago, our headquarters there. We've just got a few minutes left in today's session. Let's welcome in Kevin Green, senior market correspondent, close out the day. So, KT, we are off the session's lows now. A bit of a profit-taking kind of day. It seems rotation into more sort of defensive type names, rotation in the commodities patterns as well. What's standing out to you in 5 minutes?
Yeah, look, I agree with you when you're looking at the defensive nature of this market. At least for today, utilities did outperform, as well as some of the other interest rate sensitive areas of the market as yields actually did move to the downside. But we still have around 40% of the stocks in the S&P 500 so far. And we are kind of coming close to that 6,900-ish area. Obviously, that was a big area of resistance over the last 2.5 weeks or so. We would like to leverage that as an area of support, at least for now. We can kind of see that we've been pretty much range bound throughout the session. Now, it is actually very interesting. We'll see how this actually plays out tomorrow. But you can make the case that maybe an inverse head and shoulders pattern is kind of forming on the 15-minute chart for the S&P 500. Once again, we'll have that confirmed tomorrow. And if that's going to be the case, you have your neckline sitting at 69.15. Breakout above that would actually be fairly bullish here. Going into the close, I'm looking at 69.05 as kind of like your balance area for today. Kind of a range-bound day, but when you're kind of looking at the positioning, penny risk at around 6,900 to 69.05 seems to make sense. I would say do not get too concerned about these green days that we had, especially last week, as well as the red days. It's all light volume, and I think we really won't have a lot of this price discovery really be confirmed until probably the second week of January. So right now it's a low liquidity market, easy to push prices higher or lower, and I think that's what we're experiencing.
Volume in terms of contracts traded, shares trading hands, KG. How does that influence how you look at these charts? You just said you're waiting for confirmation. Do you extend the time frame? Do you go to daily charts? Use some of the price action for the last couple of weeks? Give that a little bit more, credence, or how does one approach that?
Yeah, so you can look at the options volume. I mean, if you look at the options volume just in general today, Alex, especially for the 0DTE options on the SPX, it was actually rather large. And actually, I believe that we have over 10 contracts, easily over 10 contracts, that have over 100,000 contracts traded on the day. That actually might be one of the largest volume sessions that we've seen on the 0DTE options, at least for a very long time. In fact, maybe the highest volume that we've seen all year. But just because we have a lot of volume on the S&P 500 options, a lot of that's being premium or those that are selling premium in this market that has been for the most part range bound. So you really want to just look at not only just the price action, but also maybe the futures contracts as well. Having that overnight session in volume backfill here gives you a little bit more confidence about these levels. But at the end of the day, once again, I think we probably will test some of these key areas of support over the next 2 weeks or so. And I wouldn't be surprised if that does happen and maybe some buyers do try to step in here as we gear up for January.
Yeah, Tom Moon was talking about the dip really potentially happening, but we certainly have hit the pause button now, started running, and let's see if things pick up come tomorrow. But now we've got the later indices that are in the red, as you say, beneath the surface, a little bit more of a rotation into more of the defensive part of the market. Energies and utilities are the both of the nice seven in the red today. All but Apple, a little bright spot there, it seems, for now at least, but it doesn't look like the money coming off the table as we approach the finish line for today and also for 2025, of course, we are in the high stretch here. So the S&P 500 held on to 6,900 today. We are down about 0.4% on the session, 24 points down. Nasdaq is doing this about 0.5% lower. We had 25,525 was your score at the end of the day. Dow Jones was down also a similar amount at 48,461, and then the Russell 2000 losing about 0.6%. So down arrows across the board, as we mentioned, off the session's lows, but it was very much a rotation. A bit under the surface, we had technology that was down around 0.5% as we saw some steam coming out of those high-flying names. As I mentioned, some of the Mag 7 under pressure. We had NVIDIA lower by about 1.2%. Communication services also down fractionally. Discretionary down around 0.9%. We did have Tesla down 3.5%. Perhaps doing a bit of a drag there. Staples just on the line to the downside. Not too much damage there, but financials are down 0.6%. And if we flip the boards, as I mentioned, we did have utilities just managing to hold on to some fractional gains there. There had been a bright spot for most of the session, as was energy. As I mentioned, more sort of defensive type trade today, 0.9% higher, as we have been tracking those crude prices as well off the back of some of the geopolitical developments, particularly around the peace talks over the weekend. Down in Florida, real estate held up as well. Of course, we did get some of the housing numbers as well, as far as pending home sales coming out. Looking pretty perky there, 3.3%, which does very much look encouraging as far as some of those buyers coming off the sidelines there. And this was your scorecard as far as their mega cap tech. So we did have Alphabet just managing to scrape through there. Apple up fractionally, but the rest were down. As I mentioned, NVIDIA was the laggard on the session, down 1.2%. A lot of news around that stock, obviously, with the news around Intel, and then also, of course, Grok, that is, of course, with a Q. So we had Microsoft and Meta and Amazon all lower on the day as well. So that's how we ended the session for this Monday, as we are approaching, as I mentioned, the finish line for 2025. KG, what do you make of it?
Yeah, once again, I think it's a little bit more defensive in nature, and rightfully so. We saw last week the volatility index, or the VIX, actually crushed to pretty low levels, actually the lowest level that we've seen in over a year, and we kind of went a little bit too fast to the downside. I think that's not really conducive for equities moving higher, which does sound kind of counter-trend, but the market actually does a lot better when we have this wall of worry or uncertainty being priced into the market and volatility does crush. We have an already low VIX level here. It doesn't really, it doesn't give you a lot of room to kind of crush volatility even more and try to push markets higher here. So I think we have a little bit more of a re-rating, and I would not be surprised if we actually do re-rate higher going into the leap expiration in January. I think that's going to be key, and the defensive trade is at least in style for now. I would still not discount NVIDIA. It's still trying to consolidate, trading at around that 170 to 180-ish area has been the consolidation, and we want to be able to break out a little bit higher. Actually, it's trading around 185 right now. If we can break out above 195, I think that would actually be conducive for the equity markets to move a lot higher from where they are at right now, and it's okay to try to test key areas of support. We had 6,900 as an area of resistance, now coming back, testing it as an area of support. We were able to close above it for today. You want to see a follow-through day tomorrow where we are able to kind of retrace some of these losses, and you don't want to see any type of major breakdown over the next week or 2 weeks. I think that would be something that might spook a lot of bulls in this market. So overall, one rotation, still a healthy market for now. Low volume, low liquidity. Expect that to be the same over the next couple of days.
Kevin, I want to come back to the discussion we were having before the bell, as I think inadvertently you found something I think is quite peculiar and interesting, which is the outlier of S&P 500 volume on its options contracts today. You don't see it in the popular exchange-traded ETFs that follow the index. You don't see it in the popular names like Apple or NVIDIA. You don't see it in ES futures contract volume. What kind of activity, I'm guessing more institutional, you mentioned premium selling. Is there outsized hedging taking place, or anything that's standing out to you in S&P 500 listed options in particular that's driving this action?
It doesn't look like it's too much hedging activity, at least for today. This looks like a lot of premium selling on both sides, Alex, right? So they look like they're trying to condor this position for the most part, right? We don't know exactly what they're doing, but if you look at the volume, it's not really concentrated in one area or another. There's definitely a little bit of a band or a range where the market kind of tried to at least compress price for today. Then you also have that 6,900 level. That's going to be a key area of not only support, but now potentially, or not only resistance, but now in area of support. And then there's pin risk that is there. We also have the end of month options as well, so we have to be mindful of that. There will be that JP Morgan collar type of situation that will have to get rebalanced out, and the market will kind of focus in on that on the last trading day of the month. But I think right now, today was just one of those days where you can just sell a lot of premium, and you're getting prepared for January. January historically has been bullish, but I think there's a tale of two tapes within January, whereas we lead up, first week of January, for the most part bullish. Then we have a little bit of volatility leading up to the expiration for leaps, which is going to be the third Friday of January. And then after that is where you see a release of a lot of this pressure on the option space that can be conducive for equities to move higher. And then we see obviously vol in February. And I think that's going to be the same playbook this year. So this coming year. So I'm not taking too much away from it. It's been a premium seller's market over the last couple of trading sessions. Would not be surprised if you see this followed up by tomorrow. And then we have that the year-end expiration. That's obviously going to be a big deal for the hedge equity funds that are out there.
KG, I mean, the commodity rotation, as we talked about earlier today, was pretty aggressive. I mean, as you said earlier, I mean, this was pretty expected given the recent moves that we've seen, but also given some of the geopolitical developments. But, obviously we saw nat gas, we saw oil up, but we saw palladium, platinum down in double digits, silver pulling back quite significantly, copper and gold also under pressure. I'm just wondering what the message is here in the moves in metals.
Yeah, I think there was a lot of fear-mongering over the weekend here. Everybody and their mother, when I was on X, every other tweet was around silver. And usually when we get to that type of style of trading and everybody kind of focuses on a commodity, sometimes that's kind of the signal that this might be a short-term top in the market. And then we also had some developments where CME increased margin requirements. There was some rumors around China restrictions that kind of were a recycled news item from a month ago, 2 months ago, that kind of led into this as well. So I think you just see some profit taking. Now, from a technical standpoint, if you're looking at silver, yes, we have a bearish engulfing candle for today. We did hit a 3 standard deviation move from the 50-day moving average. So that also is something to be mindful of. Very outstretched compared to the moving averages over the last couple of months or so. And you are starting to see a breakdown in RSI, which we are now kind of breaking and going below that overbought territory and breaking the primary trend that we had ever since the consolidation from back in early November or so. So I think you are seeing some profit taking right now, but this is a commodity. Today we could be down 7%, 8%. Tomorrow we can be back up 5%, 8%, 12%. Who really knows here? I think we just are washing out a lot of that retail trade. And if you are a long-term bull in silver or any other commodity, the retail trade's nice to kind of get your price to move to the upside, but you like to see it kind of flush out a little bit, reset, so it can move higher here. The fundamental story is still, for the most part, bullish for silver, but technically speaking, yes, we did have a breakdown, and I think for palladium, that's actually a bigger one that I'm focusing on. A thinner market, but a complete breakdown to the downside, down 15.4%, and in fact, it actually did test its 20-day moving average today from being at those highs. So a rotation, say the least. After talking about crude oil for a second, we did get a bounce to the upside. The EIA also had some issues with reporting the inventory numbers for this week. That'll be released after the market close, so it should be released here fairly soon. But there's geopolitical risk with Russia, Ukraine, a potential attack against Vladimir Putin, and then also President Trump confirming a strong in Venezuela, also
play a couple games.
And then oil patch. So a lot going on in the energy market, a lot going on in the metal market, but it's commodities, so volatility comes in, you got to kind of brace for it.